Good morning, folks. It is Saturday, June 22nd. It's about 11 o'clock in the morning on the west coast of the United States. In this video, we will be talking about silver. And let me share my screen and we'll jump right in. I want to talk about this, or I will be talking about a article published by Bix Weir on his website, RoadtoRoota.com. And I'll share those links. They'll be in the description of this video. I highly encourage you to look at this article on silver. Bix presents 20 reasons why silver price is likely to be and should be much higher than it is today. He's suggesting that $100,000 is silver's realistic price, not only realistic, but conservative. So Bix is even going so far as to say that $100,000 an ounce is a conservative price for silver. And what we'll see in his article is how he arrives at that conclusion. And then for each of his 20 points, I'll share my thoughts, if any, on his work. And so, did I jump over this? This was the first thing I wanted to say. So kudos to Bix. This is an excellent piece of work. Thank you for sharing it with the broad market. Thank you for sharing it with investors. I appreciate it. It's a fantastic thought exercise. I had forgotten some of the ways in which silver price is manipulated and suppressed. And so it was a good reminder for me. And I thought anyway, again, an excellent thought exercise. Thank you for sharing it, Bex. This is the article. And so we'll talk about, again, 20 reasons to buy. I think he's being tongue in cheek here, but are facetious. This isn't reasons to sell silver. These are reasons to buy silver and buy as much. Well, I can't say. I can't give investment advice, so I can't tell you buy as much as you can. So if I could give investment advice, I'd tell you to buy as much physical silver as you can, but I can't, so I won't. And so let's just go through, casual Saturday morning. We'll spitball these 20 points that Bix is making. The first one is the removal of the short positions on the COMEX, and I'm guessing it's the same or similar situation on the LBMA, the London physical exchanges for silver and gold. In my picture of our future in the next few years, and just a few years, and maybe not long at all, the COMEX and LBMA exchanges essentially go away. The problem resolves itself because those exchanges are either purchased by China. China has already purchased one of the physical exchanges. Is it for the platinum and palladium? I forget which commodity it is, but anyway, it would not be the first time that China had purchased a Western physical commodity exchange, and so that's one possibility. And then outright failure, basically force majeure. We don't have the physical to settle all these paper contracts. We're going, it's basically we're going tits up. We're declaring failure. We're going to cash settle to the best of our ability. Or maybe we don't even do that, and you can sue us, and hope that you get pennies on the dollar. But anyway, in my big picture, the COMEX and the LBMA go away, and so these short positions become a non-issue one way or another. Bix is suggesting, and he does this in each of the 20 steps, that the implementation of this issue, attribute, effect, whatever, when this occurs, the price of silver will respond in this manner. And so in this case, he's saying that it will increase by a price of by a factor of 5, and then we have a silver price of $150 an ounce. And so you can see he does that in each step. So number 2, did I have anything? These are my comments. Yeah, I didn't have anything to add there. Criminal charges, JPM's already, they've been sued successfully numerous times. The fines that are imposed are a trivial cost of doing business relative to the profits that banks like JPM make. And so they simply don't care about the financial laws. It's just, it's a little bit of dust in the gears to entities like JPM. And so, criminal charges, don't care in my view of the world. Just, it doesn't matter. Yeah. Let's see, shutdown of SLV, shutdown or, outright failure. A nice or a clean shutdown would be just hey, look, force majeure, we no longer have the silver availability to continue the ETF, we're shutting it down, and then they cash settle with all the investors. So that's one possibility. I found it interesting. Oh, and then the ugly possibility is that force majeure, we declare bankruptcy and you can sue us and hope for the best. And that would be, again, hoping for pennies on the dollar years down the road as the result of some class action lawsuit. I found it interesting in number 3 here, attempt by SLV investors transfer their shares of SLV and physical silver in their own possession. I was surprised that an analyst as sophisticated as Bix is under the illusion that the average investor can take physical possession of metal off of these ETFs or trusts. The SLV, GLD, the Sprott physical trusts, etc. My take on these vehicles is that the average investor, there's no way in hell the average investor is going to take physical delivery of metal out of these vehicles. For starters, all of their documentation talks about accredited investors, that the starting point for taking physical delivery out of these vehicles is you being an accredited investor. And now if you find yourself asking the question, well, what is an accredited investor? I can assure you that you aren't one. And it's not self-declared. It's not, you can go look on Google and you quickly find out what the parameters of being an accredited investor are. And you might have that much money, but it's not a self-declared accredited investor. It's an accredited investor as recognized by the exchanges. And so anyway, you aren't an accredited investor, you won't be an accredited investor, and therefore you will never take physical delivery of metal out of these exchanges. If you were to overcome that hurdle, you actually were an accredited investor. Well, the next hurdle you run into is that you can't redeem shares onesie-twosie. There is a minimum number of shares required. I think in the case of SLV, it's 10,000 shares. And so we're talking, last time I looked, I think it's about $2 million. And so we're talking about $2 million worth of SLV shares to meet the threshold where you might be able to redeem those shares for physical. Well, how many average investors have $2 million invested in SLV? I would suggest that the number is somewhere in proximity of, is that a zero I'm seeing there? Just about zero. And so anyway, accredited investor, a ridiculous threshold, and it's the same in GLD. Got to be an accredited investor, big threshold. It's multiple millions of dollars to even start talking about redeeming shares. So anyway, it surprised me. That's back to my point. It surprised me that Bix was under the illusion that you or any other average investor could take a possession of physical metal. I want to caveat and make the point, these vehicles, these ETFs and physical trusts, they want the investor to believe that they are investing in physical metal and that somehow, they might be able to redeem their shares for physical metal down the road somewhere. That is the illusion that these vehicles want to present. It's certainly not the case when you go dig into their legal documentation. So, anyway, we can see, and I'm not faulting Bix. I'm not faulting Bix for being under this illusion, because again, this is exactly the illusion that these vehicles want to paint. The idea that you can somehow redeem for physical. You can't. Let's see. Number 4, again, this is supposed to be a short video and I'm rambling. I don't think I got anything to add there. COMEX position limits, again, COMEX goes away, LBMA goes away. This is a don't care in my world. Silver over-the-counter derivatives. I think with the explosion, explosion, I was about to say explosion, whether it's a buyout, and so somebody buys the exchanges and cash settles all open paper contracts, or the exchange declares, force majeure and bankruptcy, whatever it looks like, I think all of these paper contracts go away. And so this is just another flavor, another variety of the paper contracts written against physical silver, and it's the same in the gold markets. And so anyway, I think this issue resolves itself when the exchanges go away. Number 6, pooled silver accounts and silver certificate programs. Again, with the however the exchanges are resolved, whatever happens there, I think there will be investor awareness of those events will certainly increase. And so we'll have more investors aware of what's going on in the physical precious metals markets. The people who have already chosen to invest in these paper vehicles, they will be anxious to invest in real physical metal. And so as soon as they can get cash settled out of these paper contracts, the pooled silver, their certificates, whatever, they'll take that money, or it is likely that they will take that money and go buy physical if they can find it. And so, again, I think that this happens or starts to happen as part of the fallout of the COMEX and LBMA exchanges going away or changing hands, visibly changing hands, and especially if that's change of hands into Chinese hands. That would be very interesting. Silver to gold price. This is, in my expectation, this is the biggest potential mover for the price of silver, and it's the silver to gold ratio. Historically, it's 16-1. If you look at the ratio at which we are currently mining silver and gold out of the ground, it's 8-1. So every 8 ounces of silver, we get 1 ounce of gold. And so you could make the argument that a realistic value for the silver to gold ratio is 8-1. historically it's 16 to 1. And when I say historically, it's about 600 years. And so if you look, you go back centuries and centuries, the historic ratio silver to gold is 16. Currently it's about 80. It's well over 80. It's been as high as 90. I haven't looked at it lately. I think the peak was 113, something obscene. But anyway, I suspect that we will get back to uh, a much lower silver to gold ratio, and that's what Bix is getting at here. Um, that'll be one of my potential signals to move my silver investments into something else is a silver to gold ratio of 15 to 1 or lower. I expect that we'll see spikes, maybe brief spikes, down to 8 to 1. And I'll be looking to take profits at that gold to silver ratio. Let's see, number 8, this is investor awareness. A number of these factors are related to investors becoming more aware of the benefits of investing in silver. And so in this point, we're talking about that investor awareness focusing on the fact that silver supply is quickly depleting. And so as a result of that, they start to stockpile silver. And so you think about industrial users, we're talking solar panels, electric motors, all electronic components, because, as I was saying before, they've got at least a couple of drops of silver solder in them, if not far more silver. As I was focused on in a recent video, if we look at a Tomahawk cruise missile, we're talking about 500 ounces of silver in a single missile. And the surprising revelation to me out of the research I did for that video is that when we look at silver usage in military applications, a whole bunch of it's going to show up in battery technology. When you're looking for a high quality battery, whether it's industrial or military application, it based on my current knowledge, it wouldn't be surprising if you arrived at silver zinc oxide batteries, which about 70% silver content. So a whole bunch of silver in high quality battery technology. So anyway, I'm going off tangent. Industrial users. And so as these industrial users see that the availability of physical silver is becoming limited, they're paying attention to what's happening in the markets. They're seeing that the LBMA and the COMEX just failed or just changed hands, just went to from the Western perspective, they just went to an adversary, air quotes, adversary. They just went into Chinese hands. And so now the control of the physical precious metals markets are in Eastern adversarial hands. And so anyway, you might think that industrial users would start to stockpile in that scenario. Number 9, this again, awareness, industrial applications, viable substitute. It wasn't clear to me exactly what Bix was referring to in point number 9, so I'm actually going to skip over that. If I have a conversation with Bix, I'll ask him what was he referring to in that point. This is another investor awareness kind of thing. Basically, the public waking up to the idea of, oh shit, I don't own any physical silver, maybe I should. And they run out and try to buy physical silver. And of course, back in the 70s, the bull market, the precious metals bull market that happened in the 70s, investors were lined up around the block to buy physical silver. and ready to buy it at any price. You know, when price reached $48 an ounce for silver, investors were still lined up around the block, anxious. You know, please sell me some silver at $48 an ounce. So, and so that's what we're getting at. Number 10, 11, you know, this is the bullion banks and the government fessing up, confession time. Oh, yeah, we've been doing bad things. I'm not holding my breath for that one. I don't think we need to spend any time talking about it. Honest data. And so in this category, we'd be talking BLS, Silver Institute, World Gold Council, you know, any of the organizations that pretend to report supply and demand for the precious metals, honest accounting from those agencies. And you know, again, I'm not going to hold my breath for that to occur. I suspect that not only in the case of the precious metals, but in a broader perspective, you know, one of the big trends that's happening right now in our world, people, and this is a global phenomena. This is not a east-west kind of thing. This is globally. Individual human beings are realizing that all of these organizations that have been dominating human existence for centuries, it's all bullshit. And everything that these organizations tell us has an agenda. And it's not an agenda that supports human life in a good way. So anyway, I don't want to go off on that tangent, but anyway, that's what Bix is referring to here in number 12 is honest reporting of supply and demand. And you know, again, I'm not holding my breath. Referring back again to my recent research on silver and military usage, I suspect that there's a whole bunch of silver being used in military applications that is just not discussed. You know, think about any mobile missile, so not just Tomahawk, but any other missile technology. It's got batteries. And so, you know, every missile in the inventory has batteries, has at least one battery, in my opinion. And most likely that battery is a high quality silver zinc oxide battery that uses up a bunch of silver. And that aspect of silver demand is not reported by these agencies that pretend to report supply and demand numbers. But, you know, again, all of this, folks, this is just Brian. It's Saturday morning. We're having a thought experiment as we refer to Bix's excellent article, his analytical work. So that's all we're doing here. Number 13, USGS. You know, again, this is acknowledgement that there is not a whole bunch of silver left in the ground, and that the silver that is left in the ground is going to be expensive to recover. It's in locations that are hard to access. It's in locations without water. And so that's one of the surprising things, you know, if you're new to investing in the precious metals world, if you start digging into, okay, what's it take to mine precious metals? There's a tremendous amount of water involved. And so there are places in the world where there are large, stupendous even deposits of precious metals, but you can't mine them because there's no water. And so, yeah, okay, you got a bunch of precious metals sitting in the ground. They are inaccessible in an economic manner. It's like, yeah, okay, yes, one way or another, you could get that metal out of the ground, but not economically because there is no nearby source of water. And so anyway, there's a bunch of that. And so that what we're getting at here in number 13 would be an acknowledgement that the economically available supply of silver is quite limited. So 14, let's see. This is getting at the idea of price inelasticity. It's the idea that industrial users of silver don't care what the price of silver is. And so back to the $1,400 iPhone and 3 drops of silver solder. It doesn't matter whether that silver costs $30 an ounce or $1,400 an ounce or $2,000 an ounce. Apple is going to buy that silver solder because they need those 3 drops to make their $1,400 iPhone. But that's not something that is obvious. As you start to dive into analyzing the silver market and the world, the investing in silver, you might think that industrial users of silver would be curtailed by the price of silver. As silver goes to $2,000 an ounce, they'd stop making as many iPhones. Not the case. And so that's what Bix is getting at here in number 14. Price inelasticity, I think, is the economic term. 15, again, investor awareness that silver is a better investment than gold. If you and I were sitting down across the table from one another drinking a beer, I would encourage you to weight your precious metals portfolio towards silver over gold, but I can't give financial advice again. Bix is referring to investors becoming aware that silver is the better investment, and arriving at the conclusion on their own that they will weight their precious metals portfolios towards silver over gold. So currently, if you look at what's the common advice, well, first of all, most financial advisors and investment advisors, they're not going to advise that you invest in the precious metals because they don't make any money by selling you whatever, stocks, bonds, mutual funds. They don't make money when you buy physical precious metals, so they won't recommend it. The few that do recommend investment in physical precious metals, they're going to most likely suggest that you weight your portfolio towards gold as the safer. Historically, gold has more. There's more data backing gold as an investment than there is for silver. And so, a conservative financial advisor, investment advisor is going to recommend a weighting towards gold. If you ask me how I am personally invested, I will tell you that I am so overweighted towards silver, it hardly bears, the portion of my investments allocated towards gold barely merit mention. Barely merit mention. That's a mouthful. I have very little weighting towards gold in my personal investments, but each of us has to arrive at that kind of decision on our own. I can't tell you I can't tell you anything that might look like investment advice, but certainly can't tell you how to invest your hard-earned money. Anyway, I'm off on another tangent. Number 16 here, we're talking about the fact that the U.S. Mint is constitutionally required to produce enough silver coin to meet demand. End of sentence, full stop. No further explanation. Produce enough silver coin to meet demand. And of course, today we're talking about U.S. Silver Eagles. And for years, the U.S. Mint has failed to meet demand. They don't produce anywhere near enough U.S. Eagles to meet demand. The Eagles that they produce, they release to a limited number of preferred dealers, and then that limited supply trickles out into the market. That's why the premiums on U.S. silver Eagles is, it's obscene in my opinion. It's at least 30%. And so, on a $30 silver, you're going to spend at least, 39, 40, $41 on a U.S. silver Eagle. When demand is especially high for silver, of course, that if we go back 18 months or so ago, that was certainly the case. People were paying 100% premium for silver Eagles. I mean, certainly you and I weren't. I mean, that's just silly. $30 silver and you're paying $60 for a U.S. Eagle. I mean, what are you thinking? That doesn't make any sense, but people were doing it. So anyway, that's what we're getting at in number 16. I don't expect that to occur. I'm not going to hold my breath for the U.S. Mint to meet its obligation. Let's see. I'd love to see it. Don't get me wrong. I'd love to see that be the case. There is a constitutional requirement that money in the United States is only silver and gold, physical silver and gold. What happened to that? Constitutional money. Let's see, number 17, too hard to store. So too hard to store in regards to silver. Well, that was certainly a valid argument back in 2002. That's when I started investing in physical metals. I was buying physical silver for $5 an ounce. I'd walk out the door of my local coin shop with a handful or a basket full of, or a backpack full of physical silver for $5 an ounce. Obviously, that's not the environment that we are in at this point. At $5 an ounce, you get home with, whether it's $1,000 worth or $10,000 worth or $100,000 worth of silver. Yeah, you got a storage problem. But when we get to this point, at this point in Bix's analysis, we're on point 17. And again, as we have gone through each step, the price of silver has increased. We're currently at $136,000 an ounce. Well, storage of silver is no longer an issue when we're talking about $136,000 an ounce. A 10-ounce bar, that's $1.3 million, $1.36 million for a 10-ounce bar. That's not that's not a big chunk of silver, and $1.3 million. And so you don't have a storage issue anymore at that point. And so anyway, I don't see this as a concern. Today, at $30 an ounce, it's like, yeah, that's a factor you have to consider. Where am I gonna, I'm gonna put a non-trivial amount of money into physical silver. Where am I gonna put it? Something you got to think about. Number 18, central banks stop printing money. I don't expect that to occur, except we've got the BRICS factor to consider. And we don't know what that's going to look like. The BRICS, everybody expects BRICS to introduce a new currency of some flavor. We don't know exactly what that will look like. Many analysts think it will be gold-backed. I personally don't think BRICS will introduce a gold-backed currency for economic reasons. There are other reasons. They might introduce such a currency basically as a form of economic warfare. But, again, we don't need to go there in this video. So I don't expect the status quo to change short of some kind of black swan event, in regards to central banks printing fiat currency. So, I'm not looking, that's my point here. I'm not looking for a change here in number 18. Central banks are going to keep printing money until they can't. And can't, that looks like that's a loss of trust, which of course, that's another one of the big trends that's happening right now. Loss of trust in any number of, as I was referring to before, all these international organizations, the UN. It doesn't have the same, the G7, they just had their big meeting recently. And those international organizations, Western created, Western dominated, they just don't have the ambiance that they used to have. Let's see, what's this? Number 19. Let's see. That's constitutional money again. That's what number 19 is about. Number 20, this is basically all of the previous 19 points have occurred. Silver and gold are both honestly priced at a realistic value. Okay, let's continue now. BRICS. I'm thinking BRICS nations and Bix Weir, and mixing up the two, obviously. So Bix, in his analysis, he acknowledges that at some point there is almost certainly going to be a new currency coming onto the scene. Today, that wouldn't be surprising if that was a BRICS currency. And of course, 2024, we've got Russia as the chair of the annual BRICS summit. We've got 59 countries, evidently, that want to join BRICS nations. They'd sign up today if BRICS would let them. And one of the outcomes of the 2023 BRICS summit was all the finance ministers and banking related folks were charged with go figure out how to introduce a BRICS currency. And so they're supposed to come back in 2024 and present their findings. And so anyway, we may see that new currency, maybe a BRICS currency that may be digital, maybe tied to commodities, maybe tied to gold. We just don't know. But that could be the new currency. But anyway, in this analysis, Bix is acknowledging that at some point, it's not going to make any sense pricing the precious metals in US dollars. And we'll stop talking about US dollars because they'll be irrelevant. They'll have reached their true value of zero, which of course that's the true value of any fiat currency is zero. And then we'll start pricing the precious metals in the new currency, whatever that is. And so that was one point. Let's see, I've got a couple other things. These are ideas that occurred to me as I was thinking through Bix's article. So at some point, the government may step in and say, hey, silver is a critical metal. We've got to have it for our military industrial complex. We're nationalizing anything having to do with silver just got nationalized. And so that's a, black swan, something coming out of left field. How do you price that? No idea what that would do to the market. Could we see legislation require, it'd be back to 33 and 34, where the government mandated that the citizens turn in their gold. Could the government pass legislation requiring us to turn in our silver? I don't know. Government do whatever they can get away with. Silver will be cheap relative to gold. This is an important point, in my opinion. So when the average investor realizes that they want to buy gold, they decide for whatever reason that they want to buy physical precious metals. I said gold. Let's just talk about physical precious metals. And they look at gold. So today gold is 2,300 an ounce, 2,350, whatever it is. Silver's 30. And so the average investor decides, hey, I'm going to go invest in the precious metals, a couple $100. Well, do they want to buy a fractional ounce of gold? So they get a quarter ounce gold coin, maybe. Or do they want to go buy 5, 6, 8, 10 ounces of silver? And, there's a psychological factor there. It's like, I want to walk out the door of my coin shop with the most metal possible. And that means silver, not gold. So, and of course, I would point out that those fractional ounce coins, quarter ounce, 10th ounce, whatever, very expensive, very high premiums on those fractional ounce coins, whether gold or silver, it doesn't matter. Stay away from fractional ounce coins. And so anyway, this is another factor, in my opinion, that will drive the price of silver higher, is because investors will be favoring silver over gold simply based on price. It's cheaper than, and I air quotes, that's a psychological thing, cheaper. But anyway, I think that's something we should keep in mind. Legislation. This is, again, there's just no telling what the government might do. Hell, they make all coin shops are now illegal. And they'll couch, the narrative will be that criminals are using physical precious metals to transfer funds. And therefore, we have to shut down all trading in physical precious metals. And that's an ugly scenario that I really don't like thinking about that. And of course, what it does is it forces precious metals trade into a black market. It's not going to stop. It won't stop the trade. Government regulations and laws never stop an activity. It simply forces it into the back alleys, and increases the prices, increases the profits. How many people got rich during Prohibition by supplying alcohol that was made illegal by the government? And so anyway, don't know what kind of legislation might be passed and how that might affect the price of silver, or the ownership, existing owners of physical metal. Don't know what new legislation might look like. Yeah, okay. I'm long enough video as it is. There again, legislation, they shut down all trade and can't trade bullion anymore, can't trade numismatic coins anymore, can't do it online, can't do it at the store, can't do it at the pawn shop, can't do it anywhere. It's illegal. I'm just saying. We're sitting here, this is a thought exercise, so something to consider. And what does that do to price? And of course, now we're talking, we're back again, it's in the black market. Obviously, price goes up on the black market. You have to be willing to, anyway, we won't go there, but the price will go up. But there will still be markets available for buying and selling physical precious metals. And this was just me thinking about, in a failure scenario, COMEX and the LBMA exchanges go away. All of those points in Bix's analysis occur pretty much automatically. And then, the failure of the exchanges, those things happening lead to or result in all of these things happening. And this is what I was alluding to before. These are basically investor awareness. It's investors becoming aware that silver is a good place to invest and taking action, not just realizing, but actually taking action, moving their money into physical silver and what that will do. Let's see, we have anything else? That's it. So wrapping up the video, this is a link to the article. I'll include it in the description below the video. This is Bix's website. I have to admit that I hadn't spent any time on his website. So, and you know, my bad. I'll do that this weekend. But I've been saving this article because I think it is worthy of your attention if you are a silver investor. So I'll wrap it up there. Stop sharing my screen. Enjoy the rest of your weekend, folks. See ya.